All right, guys, back to work tonight. One more day left in this week. Want to make sure we finish off what's been a great week on a good note here tomorrow. It's Thursday evening after all. It is October the 21st, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it is great to have you with me. My job tonight, very important job, my job is to help us fund the best trades, setting up for Friday's trading session. I got a great video in store for you guys and gals tonight. Charts are all ready in the background. As you can see, S&P's here, Nasdaq's here. Oh, the gold is always here, and glad to see you are here right along with me. Got a lot of good trades setting up here right now. Got that big sell-off on the Nasdaq. Got some significant profit taking on the E-minis off those all-time highs. I can definitely see some short setups as we try to complete the rotation on the E-minis. Gold has a nice juicy range for us to work with tomorrow. We got Jerome Powell on the microphone tomorrow late morning, so we're definitely looking for some possible breakouts, some possible failures on the gold. So I'll tell you, there is no shortage of great trades to help us finish off the week tomorrow morning in our trade room. By the end of this video tonight, you'll know my favorite trades for Friday's trading session. I'll also go over some stuff to avoid to kind of keep you out of trouble and keep you in the green, whether you're trading on your own or you're trading with me tomorrow in our trade room. Now, before we jump into the video tonight, as always, appreciate you guys tuning in. Make sure you subscribe to our YouTube channel. I publish these videos every evening with my best trade ideas on this YouTube channel. A lot of these videos are time sensitive, so make sure you subscribe, hit that little bell icon so you always get notified every time we publish something new. If you have any questions for me, drop those questions in the comment section. I always enjoy answering all your questions. I do answer all the questions in the comment section personally, so drop those questions below if you need any help along the way. And I really appreciate you guys spend your Thursday evening with me. If you enjoyed this video as much as I enjoy making it, hit that like button. Really appreciate that thumbs up here on this YouTube channel. But enough of the intro. Time is ticking. We got baseball on TV. I want to make sure we get this out of the way. I'm kidding with you. What we got going on here for Friday? Friday is right around the corner, and like I said, there's no shortage of great trades here on our radar right now. The S&P is coming off of those all-time highs right now. I'll tell you, this could really get good here for these bears, right? I got the amount above, the amount below the range. So it's not difficult to find some great shorts, both on the Nasdaq, right? You see as well, Nasdaq trying to get that move lower. So it's not difficult to find some great shorts right now on the E-minis. The S&P, I would say, definitely has potential for another leg higher, right? That's a really strong breakout, right, going higher there. So I definitely have some targets going higher. I'm not going to shy away from buying those all-time highs right now, but there are a couple setups I've got to make sure we get beforehand. It's going to be tough. It's going to be tough to be a buyer on the Nasdaq until we get down around some of these major lows down here. I'm going to break it all down for you guys tonight on this video, but I would love to ride this momentum back down to some of these major lows here on the Nasdaq. Gold again is a range. You know, I love ranges because ranges make our job so easy, right? Find areas of resistance above, find levels of support below. We're gonna sell high. We're gonna buy low. We're gonna trade the breakouts, right? Trade the rotation. So lots of really good setups on the gold. I'll tell you one thing about gold: the buyers do have the overall momentum, but there's a couple really big clues that kind of tell you unless the buyers are holding their cards right now, this thing looks like it's ready to collapse here on the yellow metal. I'll show you why as we go deeper into this video. Now, tomorrow's a Friday. Let's make sure we're all on the same page tomorrow because, you know, tomorrow, it's a Friday, right? So Fridays are always a little bit smaller window of opportunity. And the reason why I say that is because, yeah, you know, the markets are going to be open all day tomorrow. They'll be moving all day tomorrow. But you ask any experienced trader and they'll tell you the good stuff is that first half of a Friday, right? Once you get into the afternoon on a Friday, we are not our best, right? We're not at our best. And the markets are are not at their best either. So my kind of goal on a Friday morning is, as I talked about last night on our psychology video, my goal is always to come in and grab the best trades I see. But on a Friday morning, I know that time is a really precious resource. So we definitely want to get to our desks sooner than later tomorrow morning. Now, fortunately, tomorrow we've got a bunch of good news that could really get these markets moving here for us. The big news of the week really is that PMI composite flash number at 945, that purchasing managers index. We're going to find out right away if this inflation stuff is here for a little bit longer, because of course the purchasing managers index is usually a leading indicator for the CPI report, which we'll see next week, right? Consumer price index. So that'll be a big number tomorrow. Hopefully the markets give us some nice juice coming off of that number. And keep in mind, guys, it doesn't matter what the actual news is, right? That's why you'll probably never hear me say, if we're higher or we're lower. It doesn't matter. The news itself is irrelevant. What we're looking for is we're looking for that juice. We're looking for that momentum move, that big move after those numbers come out. So it doesn't matter what the news comes out as, right? All that matters is how the market reacts to it. That's one thing to keep your mind for tomorrow. And I talked about Jerome Powell. Now, this is not to be confused with his, kind of semi-annual testimony. Jerome Powell, of course, is the head of the Fed here in the U.S. When he speaks, usually people listen. Now, 11 o'clock on a Friday, this could really, we talked about making your money early in the day tomorrow. This is one definite exception. If he said, remember, as of right now, the world pretty much knows the Fed plans to begin their tapering process, right? Raising rates and not buying as much bad debt. They've pretty much told us November is the month they're going to start tapering, right? Start, cooling off the economy basically, right? Will he say something tomorrow that contradicts that, right? Will he say something tomorrow at 11 o'clock during his speech that might poke holes in that, or might suggest it gets moved up or moved back, right? That's the stuff that we're listening in for tomorrow. Now, I'll tell you, it might be very slow tomorrow. It's been a really, really busy week in our trade room. Might be very slow around 11 o'clock, but I'll tell you, that's definitely some news tomorrow that may really kickstart the lunchtime session and may give us the nice little afternoon delight to finish up the day on a Friday afternoon. So again, we definitely have our red flags on Friday afternoons. But if there's one guy that can get these things moving to kind of give us some more trades on a Friday, that is definitely going to be it right there. So we'll be listening in to Jerome Powell tomorrow morning at 11 o'clock Eastern time towards the end of our morning trading session. So 9:45 PMI, Jerome Powell, those are the two big catalysts for tomorrow. So be aware of that. Let's get back to our charts here, though, for now. S&P, Nasdaq, gold, everything's all set to go here. You're going to get a bunch of great trades setting up for tomorrow. Why don't we grab the E-mini first, the S&P 500, and let's talk about this. Let's see what's going on the S&P. What's the most important factor right now? Well, in a nutshell, what's happened here? We had a bull market that finished the session in a range yesterday afternoon, right? We find our levels of support underneath the range, and the buyers clearly gobbled up that area there and sent the market running higher. You'll notice the amount the market went below the range is pretty much symmetrical. It's always going to be a little bit off, but very symmetrical as we take out those conveniently, right? Taking out those all-time highs. You can see whether it was the all-time highs or whether it was the pendulum swing, or maybe it was this triangle top as well. But you can definitely see the buyers, what we call it, completed their objective, right? And now, you would think now that unless the buyers can hold this and keep it going, you would think now we're going to get another pendulum swing back in the opposite direction. Now, let's not sugarcoat this. It's a very bull market right now. There's been a melt-up market pretty much all week this week. The market has been relatively irrational, right? The way it's kept on just grinding higher. So there is absolutely no reason why these buyers can't keep this going. If they do keep it going, I've got another objective up here, that measured move up there, 45.50 would be where I would anticipate this market in the short term to be going here right now, right? Buyers would love to get back up and retest the high, and that 45.50 area would be a pretty easy target there for the bulls. The buyers, of course, their big problem right now is, well, one, they're coming hard off resistance, right? And two, we've got this very, very obvious profit taking here, which would suggest that we've got to get some more buyers in this market before we can really commit to this thing going higher. The sellers have a great shot to take this thing lower. The only problem the bears have right now, the big problem the bears have right now is right where we are, right? You'll notice we pushed up, we pulled back, on some strength, but you'll notice I marked up that prior high. These prior highs just above the ranges, they are notorious for holding and basically keeping those bears away and letting the market run higher. So that's probably the biggest challenge we have right now for the sellers on this. So I think the easier money right now is on the sell side. Personally, it may not happen the way I want it, but I think the easier money right now is on the sell side. As a seller right now, we already have that big move up. There's a couple ways I can short this. If we do go back up and retest that high, I can then look for a buyer failure pattern, right? Coming off that high, that failure into pullback combination, right? That is always one of my favorites, right? Think about a buyer failure setup off that high. Again, there's a lot of momentum here, right? A lot of momentum here. So it wouldn't surprise me if the buyers go back up, retest the high. But once they go back up and retest the high, don't be so sure they can keep it going, right? They may try to keep it going, and if they do and fail, that's where a buyer failure comes in. And then remember, you can grab that low, grab that high, and then drill down and grab the entry short off the high of that channel. That's what we call a failure into a pullback combination. And again, looking for it to roll lower. As we go lower here, or if we go lower here right now, there's really two, maybe three different ways I can short this as we go lower. One would be, which is probably the most likely, well, again, I don't care what we get, right? I'm a trader. I'll take whatever I can get, right? But what is probably the most likely is, let's say now the buyers who get in up here, they start to get out, and the market starts to kind of grind, you know what I mean? Grind lower like that. If that happens, just draw a trend line off that low, draw it up off that high, right? See how I'm doing that? And then look for a trap. It'll almost always be just above a prior swing. These are really cool because you can go trap entry, you can go failure entry, and then of course into that pullback combination that I talked about earlier, right? So again, trap entry, failure entry, pullback entry, maybe even a strength entry, right, as we go. Trap, failure, pullback, and strength. Guys, this little sequence right here, I call this the price action cycle. It's probably the coolest thing I've discovered in almost 15 years of watching charts pretty much every day, all day. If they were open on the weekends, I'd be watching them on the weekends too. The price action cycle is like the DNA of the markets, and it really tells me which setup to look for and where to find it. I won't have time to go over all the details of the price action cycle in this video, but I cover them all in our quick start class. If you haven't grabbed it yet, I'll put a little pop-up there for you. In the upper right-hand corner, inside that quick start class, you'll learn how I adjust my strategy to changing market conditions like ranges or trends, how to find support and resistance that you can actually trust with your entries, and most importantly, how to use that price action cycle, those traps, those failures, those pullbacks, and those strength trades. I'll tell you, if you're anything like me, if your goal is to earn income in these markets each week, that quick start trading class will give you a 3-step step-by-step roadmap that will get your confidence back, help you find that edge in your trading. It's a fantastic free course on our website. Grab that class link in the upper right-hand corner, and I'll see you in the member section of the website. Now, two more, right? Two more as we go here, right? One more I can think of as we go lower here. Let's say this market just simply dumps, right, and runs lower. Another really nice one here would be a two-try trap as we go. We may not grind going lower. You know what I mean? We may not grind going lower, but if it really shoots lower, and if I can get it before we retest those lows over there, that'd be a great trap entry as we go higher. Now remember, I would love this as a channel, right? A channel will be great, but sometimes you don't get it, right? Again, if it kind of rolls lower like this, you can almost always find that channel and grab that short off the channel. But if it just dumps, strong move down, shallow pullback, lower low in price. Yeah, you want that trap, right? You want that trap. That's a great trap short, just above that prior swing, right? Say it with me. Strong move down, shallow pullback, lower low in price, right? Traps, baby. And then again, where's my target? My target is down at these lows, right? These next areas of support here, okay? So that's an easy way for us now to sell this thing as it goes lower. One last way to short this thing as it goes lower would be if they just simply come in and pull back, right? And then blast and run lower. If that happens, these are called 1, 2, 3 reversals. They're very simple patterns. I talk a lot about those in that quick start trading class. I'm going to mark up that low. I'm going to mark up that high. And then remember, this is a 6,000 tick chart. We're going to drill down. We're going to drill down to a faster time frame. We'll find our traps. We'll find our failures, our pullbacks, right? And we'll short off that channel as we're going lower. So plenty of ways to short this thing, again, as we either retest the highs or as we rotate off the highs. How would I buy this market right now? What do you think? What do you think's there's a couple ways you can buy it. Now, one way to buy it would be, let's say we find ourselves all the way down at that low, right? Let's say that by 10:15, 10:30, tomorrow morning, or maybe earlier, we found our way all the way down to that low. If we find our way all the way to that low, is this a good location to buy? Absolutely. It's a great location to buy. What's the problem though? Momentum is the problem. Very bearish right now. I can't just get into this and buy this, right? Because anytime we see a strong move, there's a good chance we're going to keep going, right? So what we want to do is you want to let the bears try twice. Let them try once. Let them try twice. Now, there's a lot of variations of this, what we call two-try reversal, right? You can see kind of an example here. We push lower, the bears try once, the bears try twice. See how you can draw a trend line like that? That's the type of technique I like to use. A trend line is great, right? So I can draw that trend line and buy off it, right? Stuff like that. Sometimes it'll run lower. It'll really cook going higher like that. When that happens, when it's almost a vertical move going higher, I like to use the two-try with a trap entry. Makes sense, right? Because you're not going to do the trend line like that. You're not going to want to use like that. If it's really steep like that, use a trap. If it comes down and kind of goes 1, 2, right? Use a trend line, right? Like that. That works great too. So again, I can buy off the low. I just have to get down to that support area, get those bears to commit a couple times, because again, it's way too bearish, and then buy it going back up. And then don't forget, I can then mark up that high, I can mark up that low, and I can now drill down to my faster time frame, and I can buy that pullback too, right? This is really common, right? Really common. You can see right here, right? We go down, the bears once, the bears twice, right? We mark up that channel, and of course we wait for that pullback and we buy it back up. Let's do that over here tomorrow. Sounds good, right? Same idea there. So those are some ways to buy it as we go lower. If we go higher, really the only way I can buy this market, if we go higher right now, there are two ways to buy it. One is going to be the bears try once, the bears try twice, and get that same type of two-try failure. This is not going to be an easy trade. This can be a gutsy trade. That will be a very gutsy trade because again, look, you're buying right into that high. What'll be an easier trade long, which is really where probably the easier money would be if we start to see this thing start to either A, grind up, right, like this, mark up that high, mark up that low, right, find that trap, into failure, that would be a good trade. Right? In fact, that would probably be the easiest trade to make money off of tomorrow, because anytime the market grinds higher, it's almost like a vote of confidence for those buyers, right? So if it grinds up, find that long and we'll complete that measured move. Or maybe it just simply slams higher. We see a shallow pullback, a higher high in price, and that trap would work great too, right? That trap works great too. So, again, there are definitely no shortage of buying setups here, but, you have to think right now the easier money is on the sell side. But hey, we are traders. We'll take whatever the market gives us, that's for sure. Let's keep going though. Let's keep going. S&P looks pretty good. NASDAQ really looks great. Obviously a huge sell-off here on the NQ. Now, what's going on right now on the NASDAQ? NASDAQ has a lot of similarities to the S&P in the fact that we're bullish, right, into a trading range. We've got, of course, you can see the amount that we went. Remember, ranges are all about rotation, right? So we go into a range, we rotate lower, rotate higher. As you can see, this rotation lower, right? Remember, the S&P took out that we call pendulum swing, right? The S&P was able to go all the way back up and then sell off. You can see the NASDAQ didn't quite get that job done. It was probably going to be, it's probably that triangle they ran into there. There was also some earnings reports late this afternoon. So we definitely know the buyers tried, but they definitely have failed. So at this point right now, we've obviously got a lot of momentum now for the bears. I would argue quite a bit more now than the S&P. Remember, the S&P was sitting right on its prior high, right? The S&P was sitting right here. And so the S&P still has a lot more, again, potential to it. Again, we'll see if it actually can hold or not. But you'll notice the NASDAQ is well below that area. So the buyers have a couple more legs to stand on right now on the S&P than they do on the NASDAQ. So like I mentioned on the S&P, we're going to expect this market now to rotate. Right? It rotates off the high, off the low, off the high. So we're really anticipating a move back down to this area, whether it be the pendulum swing, down at 39s, or whether it be the, triangle, which is usually one of the most accurate ways to find these targets. And then, of course, you get that big low down there at 15,320. So, at this point, we are trading the rotation on the NASDAQ. Very difficult right now to be a buyer. Pretty easy to think about how the sellers could make some money on this. There's a couple ways that I can easily short this. Obviously, if the market was to go all the way back to the high now, that would be pretty impressive. And if it goes all the way back to the high, that would suggest there's something else out there that maybe we don't know. And if that's the case, I'll want to use the 2-try failure to really protect myself against selling into a big, strong move higher. Buyers try once, buyers try twice. Where are all the stops, right? The stops are sitting right below that low. I can now grab my short, drop it right in below that area, and ride that 2-try failure back down, grab that new channel, drill down to a faster time frame, right, and grab that short off the high. That's that failure into pullback combination. And you'll notice on this one, it's a slight variation. You're going to want to use the 2-try failure, just because, again, if this goes back to retest the highs, that will be not only pretty miraculous, but it will suggest there's something a lot more these buyers are looking for, like going back to not all-time highs there, right? All-time highs are actually way up there, right? So they may still have that kind of melt-up environment going on for tomorrow. If that's the case, we'll plan for that, of course, accordingly. But that's how I'd trade it as we go back up to retest the high. The easier trade here right now is, you'll notice I've got this new channel, right, coming off that low. I'm marking up around the highs. I wouldn't waste your time on a larger channel. The larger channel is probably a waste of time right now. You want to focus on that kind of tighter channel, right? Let's get up around the high of that channel. Let's get these buyers to come in and try to buy the pullback. Once they try to buy the pullback, remember, anytime we have this much strength in one direction, anytime you see a big strong move in one direction, you almost always get a retest. So the odds are pretty good we end up right back around that low, right? So what I would do is go up, let those buyers try to buy the pullback, and then we'll just simply look for that short, again, with a failure. And then remember, you want to find that new channel, right? Drill down and grab your entry off the high of that channel. But that's a buyer failure setup into a first test pullback setup. And guys, don't forget, I go over a lot more of these details of all the entry setups, how I find channels, what the right way and wrong way to do it is. I cover all that stuff in that quick start class. So make sure you grab that right in the upper right hand corner. Another possible setup here right now will be that grinder. Right, that grinder. If it keeps on grinding as we go lower, this is exactly what you want to look for, right? So you mark up that low. Now, I've got mine drawn like this. If it grinds lower, it'll probably be a little bit steeper, right? Like that. If it keeps grinding, mark up that low, right? Go off that high, and then just wait for it, right? Just wait for it. Wait for it to pop. That will usually be your trap. That'll be your failure. That'll be your pullback. Right? I don't want to chase it as it goes lower. I want to sell it at resistance so I can risk small to earn large. You know, we talked about in last night's psychology video, everything starts with finding an edge. This is a great example of having an edge. A lot of momentum, a level of resistance, and the ability to risk small to earn large. If you have those three things, right? Good momentum, good level of resistance in this example, right? And a good risk-reward ratio opportunity. That is what I call having an edge in the market. And that's definitely going to be something I'll be looking for tomorrow. And also, too, just in the S&P, if it was to really drop, you know, which it already has pretty much, shallow pullback, lower low in price, absolutely that trap, right? That trap will always be something I look forward to as we're going lower, right? So again, strong move, shallow pullback, lower low in price, traps, baby, right? And of course, your target is, I would say the easiest target is going to be this triangle low. And if you have an extra contract, right, leave that extra bullet on for that 15,300 area for that big move back down to retest that low here. Now, at this point, we've pretty much nailed down all the sell side stuff. How can I buy this market? Again, right now, it's going to be difficult to be a buyer until we either A, get down around these lows and buy it back up, right? Or B, we really have to kind of prove to us here these buyers mean business. Because in all reality, like I said, even if it does run back to these highs here, you're still at the highs, right? So it's like you still have great shorts going back down in. So it's going to be difficult to really earn our trust as the market goes higher. The easiest trade right now, is going to be if we get down to those lows, get those bears, of course, because it's very bearish at that time, get them to try twice with a 2-try reversal. And then, of course, right, the stops are right above that high, right? So once you see those bears roped in once and twice, okay, again, there's a lot of different ways you can take this trade. One of my favorites is that trend line, right? Sometimes you don't have the trend line. Sometimes you go like this where it takes off to the downside, the bears once, the bears twice, get that trap, right? That's a great, see that right there? Right, same thing, right? So maybe we go over here, a little trap low, okay? That will work too, okay? So again, think about, you know, kind of how that thing's set up over here. And again, you'll see a lot of examples of these 2-try reversals. I have hundreds of examples of how we apply these setups inside of our quick start class. So make sure you grab that. So strong move down, right? Get those bears, get those bears trying once, get them trying twice. Maybe it's a trap, right? Maybe it's a trend line. Again, we'll know more about the variation once we get there. And then once we get that nice strong signal for the entry now, and the market starts to run higher, you got it, right? Now we trade rotation, right? They hold off the lows. Big magnet now turns on back at the highs. We're trading that rotation. We've got good momentum now going for the bulls. I've got good momentum. Find a good area of support and then get a low risk, high reward trade. Again, that's how you find an edge. Good momentum, good level of support or resistance, right? And I say good, right? Remember, not all levels of support and resistance are the same. You'll notice I'm not using fibs. I'm not using pivots. I'm certainly not going to waste your time or my time with value area high or value area low and crap like that, right? Yeah, they work, like a broken clock. They work a couple times a day. You can always kind of cherry pick a couple examples of most indicators working for you, but not enough to make us consistently profitable, unfortunately. If you're like me and trying to earn income in these markets, you really want to rely on the price action, momentum, good level of support or resistance, right, based on price action, and then trigger the entry. Not to worry, I'm going to cover more of those details in that quick start class. But that's how we're going to cover it as the market rolls lower. What if we start to make the run going higher, right? What if we start to make the run going higher? Now, there is definitely potential. Let's say, for example, the market was to really jump up, right, and start running higher here. What you can do is, again, find like a little hidden channel here, right, and then grab that trap below that low. Again, this is going to be a very gutsy trade. It'll be a very, very gutsy trade, right? So it pops up. We start to almost grind higher. Right? Find that channel, find that trap, and buy the trap, right? Again, very gutsy trade. The easier trade here, the one that will be a lot easier to convince me of, will be, can we get up above the moving average, right? Can we then hold that pullback and go? Because if we can go 1, 2, 3, then we know for almost certainty I can rely on buying that first test of this channel, right? Repeat after me. First test is always the best test. So if I can get, anytime I can get this 1, 2, 3 move, right, that first touch of that channel is money, right? That's where the best entry is. It always is, right? So that's the same thing over here. You know what I mean? If we can get that 1, 2, 3 move, find that channel, again, we're going to find our failure, our trap, our pullback setup. If you've taken that free trading class I keep mentioning, you know exactly what I'm talking about. The next objective overhead is actually pretty easy. We get some major tops up there at 15,520. Right, we're just right up top there. Get the pendulum swing, major swing. So yeah, that 15, 5, 20, 21, 22, 24 area up there would be I think a pretty easy target there. If it really starts to run tomorrow, right? If we go up, we break out, pull back, and we keep on going, just remember that the breakout leg will be the measured leg. Okay, so let's say, for example, the market really keeps going here. The size of that leg will be a measuring leg. Remember, anytime there's a range on the chart, the size of the breakout leg, okay, ends up being the measuring leg. So if we, for example, right, we go up, we pull back, and we just blast going higher here, I'm going to use this leg and double it up, right? And that's going to give me kind of where that next objective will be, right? The breakout leg is the measuring leg. And again, I say this because we're not, unlike the S&P, we're not at the all-time highs yet, right? The all-time highs are way up top there at 15,700 basically. So this thing may continue its little melt-up market, right? It jumps up, starts to grind and grind and grind and grind. You know how to trade these, right? Right? You know how to trade these. We mark up the highs, mark up those lows. We're grabbing those traps, right? We're grabbing those failures. And I know it can be difficult to wait for those, but I'll tell you, those are the easy money trades. I tell my clients every morning during our morning prep, these are the easy money setups. Just wait for these today. You can force trades all you want, but there are certain setups like these, right, that are just, they're very reliable. They're almost bulletproof. And you're going to get 3 to 6 of them every day. The question is will you waste your ammunition on forcing trades, up here, right, where you're just not there yet. Right? But once we start seeing that evidence, then we can get those longs going off the lows, those channels. We will see. This should be very interesting to see what happens on the Nasdaq. And again, don't forget, tomorrow morning we're going to be in our trade room at 8 o'clock Eastern time, and we'll do it all together. Right? We'll do it all together. Let's keep it going here. Over on the gold, wrapping things up tonight on the yellow metal. What's going on here on the gold right now? Boy, gold has a lot of interesting clues here. It's a bull market overall into a trading range, okay? And what do we know about ranges? We know that ranges like to rotate. But you'll notice on the gold right now, the buyers, even though they do have that little bit of the edge because of that bias going to that trading range, they really they aren't pulling their own weight, right? Because you'll notice the amount we go below the range never completes up here, right? That pendulum swing doesn't work. Amount we go below the range doesn't complete over there, right? So the buyers just, again, they have their edge right now, but they're struggling. They're struggling here. Look at the triangle. Right, the triangle. You'll notice, right, we go up, down, what's going on, right? We should be rotating back higher again. So this is why I said earlier, we're definitely still bullish right now. It's difficult to call this a bear market just yet, but I'll tell you, there's no shortage of overhead resistance. There's no shortage of headwinds right now for these buyers, which I think really gives us a great chance to trade this going into Friday's trading session. The buyers, of course, they want to get up and take out some of these highs. The buyers would really like to get up to test the high of that triangle. The sellers would love to come down, take out that low, but more importantly, you got Friday's close. That's last Friday's close, right? It's very, very common for a market that flounders around like it did this week, right, to go up and end up right back where last week finished. And right below that, you'll notice there's this monster range over here. And of course, we know that ranges are magnets, right? Basically, the beginning of the month, that big range we saw. So it wouldn't surprise me at all if this mark kind of skids lower here tomorrow. At the same time, though, you can definitely see, right? There's a big top up here. So buyers, if they can get their act together here, that 1800, a big top up there. So there's definitely some big targets here for tomorrow. We just hope that hopefully we can get this thing to move for us on that PMI number tomorrow morning and get some good setups. How do I sell it? How do I buy it? Well, let's talk about this. So if the market runs higher, how would I sell this market as it runs higher? Well, what you want to think about here is we're overall bullish. Okay, we're always talking about the two kind of checks and balances. How is my location and how is my momentum? All right. Anytime I take a trade, that's always kind of the two. I'm going to give you guys a set of rules to follow the trade room. And so we'll follow a set of rules every morning that we make sure we qualify every trade. But two of the most important rules and two of the easy ways to kind of qualify the entry is to ask, okay, how's location and how is momentum? So if I'm at these highs up here, whether it be here or here, right? If I take out some of these highs up here and get up into areas of resistance, that's a great place to sell short. I can take a small amount of risk for potentially a very big reward on this. So location is great. The problem is momentum. Momentum is a big problem right now. So whenever we're trying to go against momentum, that's when you use the two-try failure variation. We want the buyers to try once, the buyers try twice. Remember, there's a lot of ways you can take this trade off that trend line, off that trap high, just simply selling into stops, right? And then of course, if we can get it, I say get it because there's a trend line coming down here right now. If it starts to run lower, that is exactly where you look for that trap. So think about how this could easily set up here for tomorrow, right? We pop up, we take out some of those, right? Some of those previous highs up there. Maybe it's there, maybe it's all the way up here. I don't know. The buyers try a few times to keep the party going. Okay, they struggle, and we get short into that failure pattern. Okay, two-try failure because going against momentum. Then the market rolls over. We know we have that trend line coming up. So traps are always going to be your best bet whenever you're concerned about location. At that point, momentum is turned. We're not worried about momentum anymore. Okay, we're worried about location because we have that rising support trend line. Anytime you have to worry about, am I selling into support or buying into resistance, traps are always going to be your absolute favorite, your absolute go-to entry setup. And I'll talk more about that, obviously, inside that quick start class. But that's how I would trade this thing, right, as it comes off of that high. And then the fun really begins if we get the drop, right? If we get the drop. Now, keep in mind, if we sit here for a while, again, like I mentioned earlier, there definitely is like a triangle going on. So eventually, we're going to probably see a breakout. Eventually, right? That triangle kind of consolidating here. We get some major news tomorrow at 9:45. We got Jerome Powell 11 o'clock. So it might be waiting on that for us tomorrow. So if we do sit inside the range, just sit right on hands. How do we trade this if we go lower? right? We've talked quite a bit about these patterns already, right? If you recall, kind of the one that I kind of like the most is the one where it kind of grinds lower, right? It pops lower. It starts to grind like that, right? Grinds lower here. What do? You mark up that low, right? Yep, you mark up that high. You find that prior swing. You grab your trap. You grab your failure, right? And then, of course, into that pullback. Again, right? Trap, failure, pullback combination. And again, I'm just scribbling on my chart right now, right? I show hundreds of examples of that stuff inside that quick start class, right? You'll see why I apply that stuff on our favorite markets like gold in our trade room. So as the market rolls lower and starts to grind, right? That's where you go, okay, let's wait for that pop, find that trap and back down. If it just shoots lower, right? Remember what I said earlier, strong move down, shallow pullback, lower low in price, and then pops right back up again. That trap is money, right? That's an easy money trade. In all reality, I don't care where I am when I see a setup like that, right? If we have enough strength going lower, you got Friday's close down there acting like a magnet. I know it's scary when the market makes big moves like that, but I'm telling you, when you have enough momentum like that, no excuses. Take that trap. Right? As I mentioned last night in our psychology video, trading psychology video, you want to tell yourself, win or lose on that trade. My job is to take that trade. Again, win or lose, we know that over a long period of time, there is a statistical advantage that trade will make us money. Might not be that specific example of it, right? But that's not our job. Our job is to execute, as the late Mark Douglas always said, right? We focus on the process, not on the profit. That's a really good example of an example right there. And then who knows, right? Maybe we just simply roll lower. Maybe they hold the pullback, right? And they jump off the moving average, mark that low, mark that high, drill down to your faster time frame and grab that short. And this could be any of the short setups we talk about in the quick start class. It could be a failure, it could be a pullback, it could be a trap setup. I'm just going to give you some ideas there, things that I'll be looking for tomorrow in our trade room opening up at 8 o'clock Eastern time. How would I buy this market right now? How do I buy it? I'll tell you right now, I really don't want to buy this thing if it rolls lower like this, because now you got that trend line coming down. You know what I mean? Like, this is just asking for trouble if we go lower. What I would do is, if it goes lower like this, is wait for those buyers to come in, try to get long and just short into their stops, right? That's easy money trade right there. Because at this point now, they failed rotation. You can almost guarantee there'll be a whole lot of bears looking to snack on those buyers' lunches right there and short that thing back down again. That will be a great trade. Eventually trying to go long, but going short in the meantime. If we go higher here, right? If we go higher here, again, we know where the buyers want to get to. They probably want to get up to that trend line. They get that big top overhead. We're going to have to see one of those three breakout patterns. We're going to have to get up. We're going to have to hold that pullback and blast. Again, I'm not so concerned about where I am at that point. If we have the 1, 2, 3, find that new channel, drill down to your faster time frame, right? And grab that first test. Remember, win, lose, or draw, my job is take that trade. Okay, second one would be mark up that high, right? We call this the pop and the pullback. Second one here, strong move up, right? Deeper pullback now. Deep pullback. Bears come in, they try to get short off the moving average. We're holding that high. I mentioned this on the S&P and the Nasdaq. We hold that high now. Okay, and now remember, anytime we see a real strong move, right? So these do happen a lot. You'll see a really strong move. Nobody wants to buy way up there. So what do? They take their profit and the market pulls back, but they don't get underneath that high. We get underneath the moving average. The bears are coming in now and trying to sell short. They try a couple times. We've got them right where we want them for a failure into pullback combination setup, all based on price action. Right? We're not reading tape. We're not using momentum indicators. Don't waste your time with divergent signals. Again, indicators are about as useful as a broken clock. Right? Skip the fibs, skip the pivots, and just trade the price action stuff I'm talking about right now. The only non-lagging, the only consistent indicator is those candlesticks themselves. So that'd be another way to do it as we go higher. There are a couple other breakouts we can look for, but we'll have to wait for that tomorrow morning and see how we do. But now you you can see some of the ideas I have for trading this gold breakout going higher if we can get it. Again, careful the little range, right? We really don't want to trade in the middle of that range, so wait for the breakout, buy it low, sell it high. I think the easier money right now is the sell side, but again, we are traders, right? We're going to take whatever the market is going to give us here tomorrow. Don't forget, tomorrow morning, 8 o'clock Eastern time in our trade room. Call the office if you guys have any questions. You want to get registered as a new member. I'll put all the membership links you guys need right in the description of this YouTube video. If you're on the blog at sidewaysmarkets.com, I'll put a big button for you right below me tonight on the website. So yeah, grab that link, hit that button. Join the trade room tomorrow morning. We'll trade this stuff together. I hope by now you subscribe to our channel here on this YouTube channel. Hit that bell icon so you always get notified when I publish something new. And again, I'm going to be here. I'm going to be here all evening, so don't be afraid to call the office if you have any questions along the way. Guys, thank you so much for tuning in. It's been a great week so far. There's absolutely no reason we won't finish up the week with a bang tomorrow morning, 8 o'clock Eastern time in our trade room. Hopefully I'll see you there as a brand new member. If not, come back and see us next time. My name is Joseph. Be well out there. Be nice to each other, will ya? Adios, amigos. Bye-bye for now.